Good morning and welcome. I'm James Preston and this is the Early Trade Show live from Sydney on Kalkine TV. In this show we take a look at the Australian share market opening trade scenario along with the global and domestic drivers triggering the market momentum. So let's get started. The S&P ASX 200 was up by 7.2 points today. The top performing stocks in this index were IGO Limited and also Brambles Limited. Over the past 5 days, the index has gained 1.48% and is currently 3.2% off of its 52-week high. The ASX 200 was up by 0.3% just before 11 a.m, with mining stocks the only drag on the bourse, which had a strong showing from the tech sector. Xero, WiseTech and Afterpay were among the stocks recording the biggest gains this morning, along with Brambles, which was up by 2.7% despite warning of significant supply chain issues. Rio Tinto, Fortescue and BHP were among the leading decliners after BHP reported a slump in iron ore exports this morning. BHP was down by 1.5%, Fortescue dropped by 1.4% and Rio recorded the biggest drop, down by more than 2%. In the US, the Dow Jones index fell by 0.2%, the benchmark S&P 500 gained 0.3%, while the Nasdaq rose by 0.7%. Strong earnings results have pushed the major averages to within striking distance of their all-time highs. However, there are ongoing concerns about supply chain issues. Forecast-beating results from big US lenders last week set a positive tone for the third quarter earnings season, with analysts expecting S&P 500 earnings to show a 32% rise from a year ago, according to Refinitiv data. 2-year US Treasury bond yields rose 0.4%. 10-year US Treasury bond returns gained 1.1%. On the commodity side, iron ore lost 0.7%, while spot gold was also down by 0.1%. In the oil markets, Brent crude was down by 0.7%, while West Texas crude was up by 0.2%. Time now for a very quick break on Kalkine TV, and in just a moment we take a look at stocks that are making headlines today. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Thanks for sticking with us on Kalkine TV. I'm James Preston and this is the Early Trades, where we take a look at how the market has been performing throughout the morning session and why that's been the case. Let's now turn our attention to stocks making headlines today. Bookmaker Tabcorp has told its AGM that it's targeting June 2022 for the demerger of its lotteries and Keno Co business. Shareholders are set to receive lotteries and Keno shares in proportion to their shareholding in Tabcorp and retain their existing Tabcorp shares as well. Total cash costs for the deal are expected to be between 225 million Aussie dollars and $275 million. The group said its wagering business revenue fell by 17.2% over the start of the financial year for 2022 as lockdowns closed entertainment venues and events. Revenue at its lotteries and Keno businesses has also fallen by 0.2% for the year to date. Pallets and freight logistics company Brambles saw its September quarter sales climb 11% from the corresponding quarter. Chief Executive Graham Chip Chase said that its first quarter sales performance demonstrates the commercial resilience of the business, with pricing and surcharge mechanisms supporting the recovery of increased costs across global supply chains. They continue to operate in a high inflationary environment, with pallet availability constraints and ongoing lumber, labour and transport scarcity disrupting supply chains and driving increased costs across our businesses. For the full year, Brambles is guiding for sales growth between 5 and 7% and underlying profit growth between 1 and 2%. Moving on now to retail REIT Shopping Centres Australasia, who are reporting an expected dividend of 15 cents per share in 2022, assuming that there are no further government interventions in response to COVID-19. Its shares last closed at $2.72 and are up 22.5% over the past 12 months. Let's shift our focus now to property developer Stockland's Group, who have confirmed guidance for funds for operations per share between 34.6 cents and 35.6 cents in 2022. The company said that they expect the funds from operations for the second half of 2022 to be greater than in recent years. Now, there's also some unfortunate news coming in from one of Australia's big miners. The mining giant of BHP have identified that their iron ore exports have failed to match last year's output for the third consecutive quarter, extending a trend for weak supply from the world's biggest miners. BHP shipped 70.8 million tonnes in the 3 months to September 30, which was 3.5% less than the same period last year and also lower than the 3 months to June 30. Output at Port Hedland was hampered over the past month by a major maintenance campaign on one of the car dumpers, but a shortage of train drivers is also now starting to bite BHP's production volumes. The weak September quarter result came after BHP's iron ore exports in the 6 months to June were 4% lower than the same period of last year. Coal and copper also delivered lower volumes compared to the corresponding September quarter. Oil production increased from its Ruby project, and higher seasonal gas demands at Bass Strait were partially offset by lower production at Northwest Shelf and also natural field decline. And lastly, let's take a look at gold miner Northern Star. The company informed at its AGM that it's still on course to produce between 1.55 million and 1.65 million ounces of gold in the 2022 fiscal year. It also stuck to its net growth capital and exploration budget of $710 million over the year. Its 5-year strategic plan is targeting profitable production growth to a sustainable 2 million ounces per year by 2026. Alright, that's all for now for the early trades. Stay tuned to Kalkine TV for the latest live market updates and business news. I'm James Preston, signing off for now.